So gents, another podcast, and we finally managed to get an accountant to come on camera.
You look online, it seems that everyone's favourite friend, Google, seems to point everyone in the direction of, a limited company now seems to be the best vehicle for people to use, to invest in property. But that's not always the case, and obviously you need to make sure you're going down the right path that suits your needs.
Not often done. For obvious reasons that, lending advice on camera is very challenging, but you've got some awesome questions. Darren Parsons is the MD of Stiles Co. They've got a really good workforce. They specialise in a load of different areas as well. So I'm buzzing to talk to Darren about property related tax to the best of what he can answer. What are you looking forward to, Tristan?
Yeah, I've got a number of questions to ask him. I've been trying to get him on the show for a while now, as you said, so I'm really excited, and I think there's a lot of landlords out there that don't know the answers to the questions that I've got written down, so hopefully he'll answer all of those questions as well.
This is the thing when we designed this podcast, as we highlighted on the intro and the exit, is we wanted to make a podcast for landlords, future property investors, somewhere where they can come, they're not being sold to, they're just getting quality advice. And I think Darren is one of those people, Mike, that can give so much quality advice to people, probably more on a personal basis, but today in a general basis. So a few things I'm sure you're looking forward to as well.
Yeah, he's not a stereotypical accountant. He's come here to talk about himself, he's come here to talk about the market, come here to talk about the basic advice that landlords have to know about, and he knows it from every angle because he's a landlord himself, which puts him in a great position to speak from the heart.
100%. Shall we get him on?
Bring it on.
Let's do it.
So we are here with Darren, and Darren is an awesome accountant that's going to give us some advice around property tax and just various things with numbers that hopefully is going to help the landlords watching. I am very aware that there's obviously limits to what you can talk about when it comes to accountancy and tax, but we massively appreciate you coming on camera. Before we get into the nitty-gritty details, just give everyone a little bit of a background on you.
Yep, so name's Darren, as Ian said, work for a firm called Stiles Company Accountants. We're based in Maidenhead. Firm is about 18 people strong, so all different experiences, specialisms and everything there. Services range from personal tax, corporate tax, company accounts, audits, etc, etc. And obviously one of the things that we do get involved in with the personal tax, with the company tax, is things related to property. Whether it's property development, property investment, so we were involved in that from the planning stage all through to reporting to HMRC. So that's pretty much what we do.
And that's the reason why we've got you on camera.
Exactly that, yeah.
So Tristan's got more of the property related questions that we're going to fire at you, but one thing we always like to ask people on these podcasts is, why did you personally become a landlord? What's your story behind becoming a landlord?
Yeah, so kind of the story goes back a few years. I guess I was always wary that I needed to have some kind of future income source when I was younger. I think I said to myself that I would start doing something in my 20s, but the 20s became the 30s. Then marriage and kids and everything took over. But I always had in my head that I wanted to invest in bricks and mortar because I'd seen people do well through it. And always been kind of an avid believer that bricks and mortar will be a solid investment over time. It goes up, it goes down, but it's generally a solid investment. And then obviously there are a few changes that came into place. Stamp duty changes. The government changing the tax relief rules on mortgage interest. So I think a lot of people thought twice about maybe investing and becoming a landlord at that time, but kind of opportunities arose, and I thought, do you know what? I'll go down that road as well. So that's why I became a landlord. I've got other kind of irons in the fire as such, and I like to spread my eggs in a few baskets with regards to kind of retirement plans as well. So it's not all in investment property, but I do see it as a solid future. So yeah.
I think so many people do the same thing. They kind of look at it and they see equity growth, and even when there are these hiccups in the road that the government throw at us with the 3% stamp duty and things like that, the safe bet is always in property, as long as you get the right advice and you get the right information from the outset, and you buy the right type of property that works for you, which we'll cover again more. So Tristan, give us some of these questions.
First question is, what circumstances would you purchase a property as an individual or under a company?
Yeah. Okay. So obviously. So when you're looking at buying a property, there's kind of multiple circumstances which can obviously depend on what the right route to go is. So it can be quite complex, and it's not something that someone could probably answer straight away. Although you might have a general idea of what the best route to go is. So there'd always be tax planning involved into what route is best for you, and that would always be the advice to everyone: get the right advice, don't just jump in. I think when you look online, it seems that everyone's favourite friend, Google, seems to point everyone in the direction of a limited company now seems to be the best vehicle for people to use. To invest in property, but that's not always the case, and obviously you need to make sure you're going down the right path that suits your needs. Things that people need to be aware of, just kind of going through it. I mean, the availability of mortgages. I know that you guys in contact with mortgage advisors, but obviously there's different criteria being a limited company against being an individual. The interest rates associated to the mortgage, I believe that they're generally higher for a corporate than an individual. So that's obviously a first consideration. Other things are to do with the investment term itself. Are you looking for a short-term or a long-term investment? As an individual, everyone gets a capital gains personal tax allowance. As a company, you don't get a tax allowance there. So if it's a short-term investment that's going to be a few years, you might actually lose out on the capital gains side of things there. And then kind of looking more into the limited company itself. Obviously, a limited company, the current corporate tax rate is 19% against the base rate of tax at 20%. For an individual, going up to 40% as a higher rate taxpayer. So I think initially that's where people say, okay, well the tax rate is great for a limited company, but you can pay tax twice if you want to extract the money from the company. So again, there's other calculations that you need to put into place there. And obviously you've got the mortgage interest, going back over time, mortgage interest was a deduction as an expense on your rental profits that you're making, whereas now it's taken after your profits as an allowance, but you're only getting tax relief at 20%. So a higher rate taxpayer who would want to get the tax relief at 40%, they're now capped at 20%, whereas a limited company, everything's at that one rate of tax. So again, you're going to get the tax relief at 19% on the limited company, but not the individual. But there are so many variables, so many things that need to be considered. So the advice to anyone, it always is, get the right advice. Go to an accountant, get the tax planning done, know which route forward is right for you. Because if you make the wrong decision, it can end up kind of costing you in tax either now or in the future.
And from a limited business perspective, if you've got someone in the trades, they've had a great 12 months, they've got a good sort of cash pot in their business account as such, and they're thinking, we don't want to take all of that out as dividend payments and pay a big whopping tax on it, we'd rather invest it, and they're looking at different ways to invest, and being in the trades, property seems like a logical place to go, because they could probably take something run down and they've got the contacts to do something with it. Would you advise that individual, which may be people watching, there's a lot of those at the moment, a lot of people we talk to that are first-time landlords or soon-to-be first-time landlords taking that approach, buy that in their limited business? Is there other options that they could take, or would you say buy that personally?
Yeah, I mean, again, you'd have to run the course of the information that they've got, because if the individual is a higher rate taxpayer, then to withdraw the money from the company to invest personally would be an expensive route for them to go down. So you'd need to understand all of the information involved, but certainly the option is there to withdraw and invest personally. Probably wouldn't immediately come to mind as being the right choice. It's been popular for people to invest through their limited companies, use the money, kind of to have their own pension scheme within the company, investing in property. And another popular thing that people do to try and kind of, I guess, ring fence their business trade from an investment is you can actually loan money from one limited company to another for the other company to invest in property that way. So that's at the moment with current tax legislation, that's an option that people do follow. Yeah,
but potentially could be very fruitful from a tax perspective, but the individual would need to obviously look at the different options and see what works best for them.
Yeah, exactly. I think in those circumstances, you're looking at making the most of your basic rate tax band. You know, dividend income as a basic rate taxpayer, 7.5%. So it is a low rate of tax. Against the potential of a higher rate of tax, which jumps up by 25% on dividend income. So that would be probably the first thing that you would look at is, you know, how do you get your hands on your deposit? You know, and does that deposit then become very expensive, which might then prohibit moving forward with the investment?
So you've sort of answered the question then for my next one, but if you just go into a bit more detail, I mean, from a couple looking to purchase a buy-to-let, what's the best tax efficiency tip you could give them when doing so?
Yeah, I don't want to sound like a broken record, but again, it's get the right advice, get the advice at the outset. I guess all the variables in things that could impact your decision are doubled up when you're doing it as a partnership. So you've got two people's tax allowances to take into account, you know, you've got two people's opinions to take into account. So, you know, get the right advice. You know, sometimes it's better for one person to maybe take on the investment property rather than doing it as a couple, looking at, you know, what their earnings are. So, yeah, again, just get the right advice, make sure you're following the right path.
Okay. It's an interesting one, because as a couple, if we said husband and wife, let's say wife is on the higher tax band, husband's on the lower tax band, to be politically correct and fair. And in that case scenario, it might be that the husband is the better person to put on the mortgage, put on the title deeds, because from a tax perspective, on the lower band, it might be more tax efficient. And from a mortgage perspective, they're basing it on the rent anyway. So the income, 9 times out of 10, doesn't actually come into it. So that might be the logical thing to do, rather than putting them on both, because it's more efficient for the lower than it is the higher.
Yes, yeah, that's a potential outcome. Yeah, it's obviously a big consideration as to, you know, people want to be efficient. You know, at the end of the day, the reason people will invest in property is because they want to maximise their return. So to maximise your return, you're looking at I want to pay the least amount to get my investment, and then I want to pay the least amount of tax to get it out. So again, that's the way to look at, you know, that route out. So
yeah, it's interesting stuff.
So overseas landlords, I'm seeing more of them more frequently recently, and a lot of UK landlords going overseas as well for work purpose, and they're looking to rent out their home. What's the best advice you can give to someone that's planning on potentially moving overseas, and what do they need to be aware of?
Yeah, so I think the big thing that people need to be aware of is, you know, if they're overseas for 6 months or more, obviously classed as non-resident, and therefore the non-resident landlord scheme could potentially should come into play at that point. So if they register with HMRC and are accepted, so, you know, they'll run criteria, you know, make sure that their taxes are up to date and they're basically viable to go onto the scheme. That then allows them to receive their rents free of any tax deduction. If they're not registered on the scheme, then they are going to suffer a 20% tax deduction, you know, either from, you know, the lettings agent or from the tenant themselves, that they will receive, you know, that deduction. So from a cash flow perspective, you know, you are better off to register for the scheme, get your you know, your rents in full, and then you obviously you still have to do a declaration for UK tax purposes, but that tax declaration happens down the line. It's 9 months after, you know, effectively the end of the tax year, that payment will effectively become due.
Okay. And if the landlord doesn't submit the NIL1 that you mentioned, who would be responsible to submit that?
So if the actual declaration.
Yeah.
So I mean, the individual themselves can, you know, everything, you can do anything yourselves. You don't have to go through your lettings agent or anything like that. So you know, the landlord themselves can self-administer, submit the scheme, submit the form. Okay. It's online. You know, going onto HMRC's website. Okay.
So a lot of people aren't aware that it's the tenant's responsibility to, obviously, a let-only landlord, for example, to submit or retain the money and submit to HMRC on behalf of them with the 20%. Whereas if it's a managing agent, if they haven't got the NIL1 code, like you said, they've been approved, then it's their responsibility to retain and submit. Unless they've got the code, of course, then it's exempt from that, and it'll be up to them to do that. So recommendation would be to seek advice.
So, yeah, always seek advice, and I'm assuming, you know, from a lettings agent perspective, you know, you help and advise those people, the accountants help and advise these people. Unfortunately, you know, there are always people that try and do things themselves and will get things wrong. But again, you know, like I said, get the right advice is always the guidance that we would ever give. Yeah,
I'd be baffled if there's many tenants out there that know that.
No, the amount of landlords I've spoken to that let only, not so many. There's been a couple, should I say, where they've got a let only tenant. They've had it for years and they wasn't aware of that. The tenants have obviously moved in and they're fully not aware of it. So it's important for people to do their research and understand that, really, because a lot of people don't know that, and that's why we're here today, to try and share that information.
Yeah, exactly. And the responsibility is on the taxpayer. HMRC are very, you know, upfront with that. It's your responsibility to do it. So, you know, if you're entering anything new, you know, you should always, you know, either do your research yourself and understand it. And it is, like I said, it's readily available online. If, you know, anyone could go onto HMRC's website, understand how things work and do it themselves. But equally, you know, if people aren't, you know, capable of doing that or don't have the time to do that, or prefer to get specialism advice, you know, reach out, get that advice.
And then that brings me on to my next one, is about stamp duty. Obviously, we've seen many changes over the years, and the changes again with the stamp duty holiday during the COVID period. The government lost out on just under £500 million worth of revenue from that. What's your opinion on the changes? Where do you see it going in the future?
It's a real difficult one to see where the future brings with the stamp duty, because I know that stamp duty alone is a massive revenue inflow that the country has. However, you can't, you know, fail to see, you know, recently through the pandemic, how the stamp duty holiday has helped other industries. So not directly within, you know, the stamp duty being paid, which it is being paid, but obviously with the lower rates and you know the allowances there, but other associated trades are doing well, and so it's boosting the economy in different ways. So the government, of course, are going to have to look at, analyse the data and understand, you know, what the right thing to do moving forward is. I mean, I've not heard anything further about future holidays or anything like that. But I guess you can never say never, can you? It's a case of, I guess, watch this space.
Yeah.
It's an interesting read on the data though, because obviously the headline statement that you mentioned there, that you've probably taken from an article somewhere, £500 million lost. But it's £500 million lost on the volume of transactions that were done, and the volume of transactions that were done were much higher because of the stamp duty holiday. So it wasn't actually lost. And we saw a report at the start of the year, was it the 4th highest or something like that?
Yeah, I think it was the top 3 highest months, or the 3rd highest month of all time of stamp duty receipts were received in June. So yeah, there's media reporting. You can always report a figure in 2 ways, depending on whether you want it to be positive or you want it to be negative. We've got an accountant in the room who's smiling at me as I've said that. You can look at something positively or negatively, and we genuinely have the belief that stamp duty is a preventative tax, because we've seen physical people moving when they wouldn't have moved, accelerating their moves, and the £15,000 allowance that they were given has allowed them to move. And it's something that the test bed's now been done, that people would be able to move and would move more consistently if the tax was lower. And therefore, if more people move, as you said, the associated industries make more money, and potentially the revenue to the exchequer goes up.
Yeah, I think it's a reason for a reform on it, and I think it'd be interesting to see what happens around the election time, whether one of the parties kind of brings something that shows what they're looking to do with it potentially, because it definitely is a restrictor. And I think the average kind of rate of move is about every 7 years at the moment in the UK. Would that increase? Would people go, I do need a reception room extra, I do want a larger garden, I do need a garage now, for example, and people put that off because of the stamp duty tax, you know, paying 20 grand, they think, well, it's not worth it, I might as well extend myself and put the 20 grand into an extension. And like you say, it's a restrictor, it stops people doing the move. But if it was slightly different, would that still get the transactions going? Would they increase the amount of transactions, therefore not actually drop the amount of receipt they get from it, but help the economy along the way, which is the key thing. So we don't know. We don't have that crystal ball. I'd love to whop it out and go, there it is, and know the answer, but yeah, it's an interesting topic.
Yeah, I get it is the data thing, because how much of a false bubble did it create? You know, how many people moved that weren't going to move or didn't have any idea that they were, you know, that it was possible that they could afford to move. You know, how much did that create? And I just think, you know, it's going to involve, you know, reviewing the data, doing the research for the government to, you know, to even consider what any move, you know, that they might take is.
Yeah,
Time will tell.
I think the bubble, the stamp duty bubble that people talk about, and a lot of people said after the stamp duty, it will happen, it will pop. But the bubble was built around 3 different segments, really. It was built around the stamp duty being the catalyst of confidence. It was built about the reintroduction of 10% and then 5% deposit mortgages. The change of the interest rates meant that it was more affordable to get a mortgage, and all of a sudden, in a 12-month window, it went from being actually cheaper to rent because you needed to have such a big deposit and the interest rates were high, that actually it was kind of almost balanced or cheaper to rent. Now it's significantly cheaper to buy and you don't need a bigger deposit to do it. That's the big segment, which is why the market is booming so much now. And the other parts of the bubble, the kind of triangle, if you like, is the fact that people couldn't spend money. So people saved money, and because people saved money, they couldn't go on holiday. That's where we see the trades, you know, really, really popping off in terms of that economy, and people having these deposits to go and make a move that they couldn't have potentially done before. So although the stamp duty part of that triangle has disappeared, the other two are very strong, and if they carry on, then that bubble hopefully will stay strong for the property market, I think.
Yeah, I guess, I mean, end of September, furlough comes to an end. And I know, you know, people need confidence to make a financial move. So, you know, I guess a lot of people are waiting to see, you know, are people going to lose their jobs, you know, come the start of October, because, you know, the furlough support of the government goes. But then equally on the other side of it, you could say that, you know, whoever you speak to in whatever industry at the moment, people are struggling to employ people. So if there is a move of people losing their jobs through the furlough scheme ending, you know, it sounds like there are other jobs out there that people can move into. So hopefully for the industry, you know, that, you know, the confidence does remain there.
I think we saw inflation drastically spike as well, didn't we? You know, news articles this week showing that, which is interesting. So there's no doubt that at some point tax needs to get pulled back in some way or another. The government needs to kind of bring it back in, whether that's over a decade or however long, it needs to come back in one way or another. I think I saw a Labour MP talking this morning about, they were highlighting, the media were highlighting about obviously the lower tax rate payer being hindered by a potential hike. And he was highlighting the fact that there's other ways they can tax. There's people that make money that aren't employed, that make money through stocks and shares, through investments, through ISAs, through property. So it'd be interesting to see if Labour and Conservatives are about to start talking about who is going to take the hit. That was quite interesting hearing that this morning from a Labour MP. So
yeah.
We'll see.
And I think obviously there was the big cabinet reshuffle, wasn't there, with the Conservatives yesterday as well. And whether it's just, you know, the media talk or what, but they were saying that it was now the kickstart for the next election, maybe. So
yeah, we'll see.
So maybe we'll start to hear stuff, you know, coming up as to, you know, what their stances are.
Yeah, definitely.
The last question is about capital gains tax. A lot of sellers out there aren't aware of having to pay within 30 days. So just really want to get your thoughts on this and what the penalties are for those that don't do it within the 30-day period.
Yeah, so penalties start from £100 for non-compliance, and obviously there's interest charges on late payment of tax. But you know, like I said, they start from that and they move upwards from there. But it is very true that it's not publicised, you know, to the general public that, you know, they have this need in 30 days. I think some people probably still think that it's just declared on their annual tax return, so they've got, you know, until the 5th of April, you know, that's the tax year. Then they do their declaration by the end of January. And then you've got some people that probably just are completely unaware that they've got to declare the revenue anyway. So yeah, I think it's very, very apparent that there are going to be a lot of people that are going to fall foul of this, and it's looking at, you know, I guess how do people educate, you know, these people that are selling their investment properties? And I guess us as accountants, we've got responsibilities, you know, to educate our clients. I guess you guys involved in the industry, you know, you're involved in transactions, so, you know, educating the people that end. And then I guess, you know, the conveyancers as well. You know, I think, you know, that there's, you know, levels of responsibility that everyone can have to educate, you know, the people of what their responsibilities are. And I guess just hope that they take it on board and do what they need to do. So yeah.
There's been some fantastic old wives' tales around estate agency and around sellers about principal residence relief, which just sometimes just blow your mind. You'll see people moving back into a property for 3 days, registering with the council tax, and then saying, but I lived there last. I don't have to pay capital gains tax because it was my home. Yeah. Which are just classics, which I genuinely believe a lot of people in the estate agency still believe that's a way around tax.
Yeah, we get a lot of it. I generally kind of refer to it as pub talk. You know,
yes.
my mate down the pub says this. Principal place of residence relief is apparent, you know, when you live there. But there's set guidelines that you've got to follow, and obviously, you know, get the advice, work out the calculation, and it's important that people understand and go back and have a timeline of, you know, when did they actually live in the property.
And some of the investors that I've spoken to over the years, that calculation is why it's so important to talk to an accountant, because wives' tales, pub talk, whatever, they just don't understand how that calculation is worked out. Some people think it's the difference between the mortgage and the price they sold it for example, but they've refinanced a couple of times, and people just don't realise what the calculation actually sits like, so what the number is, which is why talk to an accountant. Hopefully that saves you money or doesn't get you in trouble, basically.
Yeah, exactly. I think, you know, people, you know, don't understand the reliefs can ultimately end up in you know, paying, you know, the wrong amount of tax, too much tax. Yeah. But you've also got the peace of mind side of things as well. You know that things are being done correctly, and therefore you can go ahead and you can spend your money and not have this fear in the back of your mind that, you know, you've submitted your own tax return, you've done it wrong, and, you know, someone's going to come knocking. So yeah.
So this is one of the favourite parts of the podcast, Mike's quick fire round, and going to put Darren on the spot with a few things. So over to you.
It's an opportunity to take your accountant's hat off, and you can give your opinion rather than having to stick to the guidelines of having to take personal advice on it. So it's purely coming from Darren, not Darren the accountant, right here, right now, as a landlord, as a property investor, as a local. First question, what do you think happens next in the property market?
I'll be honest, haven't a clue. Yeah, I mean, I'm an avid follower of the property market. I'm one of the lovers of going on to Rightmove and looking at properties and seeing prices and stuff like that. So, you know, I kind of take my gauge from that a lot of the time as to what's to happen with it. The government obviously still are trying to push, you know, first-time buyers, for instance. That's very much in the public domain of what they're trying to do. And I think, as Ian said earlier, mortgage is becoming more achievable for people, you know, with lower deposits, you know, is there. But apart from that, I don't know. I don't have a crystal ball, and I'm not going to, you know, say that I'm a property expert as such. I'll leave that to you guys. So yeah.
So if you invested in a property tomorrow, what does the perfect deal, what does the perfect buy-to-let investment look like for you?
So on a personal level, you know, obviously I'm 2 children, you know, work full time, so, you know, I'm pretty busy, you know, all the time. So any investment for me, I'm looking at something that's fairly streamlined, fairly hassle-free. You know, so, you know, from offer, you know, I want it to obviously run smoothly, but, you know, once keys are handed over, I don't want there to be lots of work, and I don't want there to be lots of problems. So for me, it would be the same as what I've done. You know, find a nice property, get the advice on the property, you know, before buying it, get the right management company involved in it, and then hopefully, you know, let it run its course. I think it's important, to have the right people in that chain, from getting the right tenant in there that's going to be in there for the long term, that's going to look after, my investment, for me. So that really is.
Yeah, I think that's something a lot of people can relate to. I think the phrase landlord conjures up ideas of Bentley driving, fat old men collecting money off poor tenants, but a lot of people are just purely there to provide accommodation on a long-term investment, because you're working full-time, as you said, you've got a family, you've got other commitments, you've got 9 to 5 and then 5 to 10 of looking after everything. You don't need to be doing everything around the property and maximising the profit when the house value will probably double in 15 years' time. And with the way that mortgages are, as you've said earlier, you can't fail but make money on a monthly basis, and keep it as hands off as possible. So I think it's something that, particularly in the southeast, a lot of people can relate to.
Yeah, and trust me, with my DIY skills, they wouldn't want me anywhere near the property as well. So
I think it's so common for people that have got the aspiration to buy a buy-to-let or 2 or 3, whatever it turns out to be, that have got kids on the school journey, that hassle-free. We just see it time and time again, especially around this area, around the home counties. And then maybe things change when someone's retired or kids have moved out, etc., and they've got more hands-on approach to be able to manage it. So yeah, it's very, very common.
Yeah, I also think sometimes that distance with the tenant as well helps, because sometimes they probably wouldn't feel that they could be open with me about things, whereas having a management agent in between, maybe they can feel honest with them, and then the management agent has a relationship with me, so things can get answered maybe a bit easier that way as well.
I think that's a great shout, because I think landlords underestimate good tenants that have had bad experiences with let-only landlords, that have had bad experiences with certain estate agents, will not do it again. And one of the things that we often get asked by a tenant is who's managing the property. It is something they want to know, and a lot of tenants will not view properties through estate agents that have had bad property management scenarios with. So especially as it becomes sometimes very difficult for certain tenants to go and purchase properties with the way that deposit levels change. It's low at the moment, but it hasn't always been. So it's a really important point, I think, because landlords sometimes underestimate that they don't want the direct contact with the landlord, because it's sometimes really difficult to reach them, and they'd rather have someone that they can speak to within reason 24/7.
Yep.
So last question. From your experience as a homeowner, landlord, what's the best single piece of property advice you would give someone today?
So on an investment basis, get the right people involved in the transactions to get the right advice. And I'm not just talking about the tax planning advice that we would give. Get you guys involved. Get the right mortgage advisor involved. I think if you've got the right people around you, you'll make the right decisions. So use the right people for the right jobs.
Get that kind of trusted power team. We've spoke about it before, and on our first podcast with Akil from our mortgage broker, is one of the things that he was very, very keen to enforce, is having that kind of power team of people, those trusted people that you can refer back to and ask for the right advice.
Yeah, we're forever doing it with clients, because obviously when it comes to, say, the mortgage side of things, people need to prove income when they're getting their mortgages, and I'm always very pro. I call it just setting up a triangle with them. So we link the mortgage advisor in with with our client and with us, so we're open and we can make the transaction happen much smoother. So just linking in the right people, getting the flow of information easier. Gets you through things easier as well. So
yeah, definitely.
All done.
Lovely stuff. There's some great value in there, and appreciate your time. And I know it's difficult as an accountant to actually go on camera and talk about these things, because each piece of advice is so individual to each person. But there's some great information there. I've made a few notes myself on a couple of bits that I wasn't aware of. So hopefully everyone watching has taken some good value. Love doing these podcasts and getting an education ourselves as well as the people watching, so really appreciate your time. We'll speak again soon. Next time we've got a client that needs some accountancy advice, we'll send them your way.
Yeah, 100%. Always more than happy to help people. So yeah, anything that people need, you know, I'm assuming you're going to put the contact details out.
Yeah, so Stiles & Co, obviously website, email, landline,
Yeah.
anyone can reach you on those contact details, I'm sure.
Exactly, yeah, perfect. Thank you very much, guys.
Thank you.
Thank you.
Cheers.
That's a wrap. I love that podcast. It's great to see an accountant on camera. Darren's obviously a really good guy, but what I also like is that classic demographic of someone that's trying to invest in property where kids are on the school journey. I was also quite interested to see for the business owners out there, people who have got limited businesses that have got cash in their business accounts, the different options that people have got if they did want to invest in property. Savings aren't making money, and I love the fact that he highlighted it might not be a case of buying for your own limited business, probably not tax efficient to withdraw the money and invest it personally, but potentially you could set up another limited business and lend the money to them to make it a more tax efficient vehicle to purchase property. So that was something that I took away, that I think there's going to be loads of people watching which will want to know more information and obviously reach out to us and we'll sort that out. What about yourself, Tristan?
Definitely, I think there's a few points, and that being one of them, but I think it'd be interesting to see what happens with the stamp duty, obviously the change that's happened and how the economy has been with the number of transactions going on. So it'd be interesting to see what happens moving forwards over the next year and 5 years, I should imagine, because it's all going to obviously move forward and hopefully it will help people continue to move.
Yeah, it's a difficult one because no one knows the answer, but it's great to get people in different industries' opinion on it.
Definitely.
Yeah,
and I think the other thing that I'm looking forward to is that there's a lot of sellers out there that don't realise about the capital gains tax. So I think there's going to be a lot of people that have maybe missed that boat and want to seek advice. And if not, they might be in the process of selling or planning on selling, so they just need to seek the advice and see where they stand with things. But I think it's interesting to see people's thoughts on that.
Definitely. I think your most recent update that you guys did, 11% of transactions were landlord sales. So there's a lot of people out there. I'm not sure all of them know about the 30-day countdown.
Definitely not.
What about yourself, Mike?
On a personal level, I think it's interesting always to see that an accountant's mind always works in figures and numbers, but the journey that he's on a family basis and why he's invested in property is really interesting, and I think it really resonates with a huge amount of clients in our area.
Absolutely. So it's another podcast. We've got an accountant on. If you're watching and there's a certain type of industry, a certain person that you want us to get on this podcast, by all means throw it in the comments and we'll do our best. Tristan was very persistent getting an accountant on, so we have our ways, and hopefully people are taking value from these. If you've got questions for any of our guests or for us as the hosts, we're always happy to have those conversations with you, so feel free to DM us, contact us on the details within the video, and as always, thanks for watching and hopefully we'll see you again soon. I'm flicking through YouTube and through Spotify. I don't think there's a podcast or a video channel on YouTube that landlords can land on where they're not being sold something.
I mean, it'd be the first time any estate agents ever asked that question, but why not ask that question to a wider audience?
Estate agents have the knowledge there, but they don't seem to share it.
Can do different episodes based around someone that wants an exit plan or someone that's just starting their portfolio.
The rules change every year.
Yeah.
So why not just open the floor out and just say, well, is property even the best investment out there?
And tax advice is a big thing, especially with everything that's changed, capital gains tax and obviously your stamp duty costs that you need to pay and whatnot. People don't realise what they need to prepare for.
We build a podcast and we build a YouTube channel, somewhere that landlords can go and they feel they're not being sold to, but they're just getting quality advice.